Good morning, everyone. Raj, how you doing, brother? Everybody well this morning? Hey, Dan. Good morning. Good to see everyone. John, how are you? Good to see you. So, folks, let me get right to it. And let's dig into this. Now, I'm not a I told you so guy, but I did tell you guys what was going to happen. And we started talking about this last week. Now, I got a couple of messages from people who were talking about, hey, JJ, are we in a trend, right? So what we'll do is let's go and walk through that right now. Borneo Trades, I do not have a code. I will get one. And thank you for letting me know. Um, I'm sure there is one. Um, Here's the deal. We're not in a trend. We're in what we call a rotation. Okay? And all I do is talk about rotations. So people in the room should know what I'm talking about. Um, it's very important to distinguish between trend and rotation. Okay, trend is when you have a market doing price exploration higher. Rotation is when you have a market going back and forth and basically rotating inventory. Now, on the 16th, I told you guys, I said what's going to happen is we're going to do a look above 54.65 and fail, and the market is going to do this. It's going to rotate lower to the bottom of this zone, 51.48. And then yesterday I said, if the market can't get under 51.48, look at the low of yesterday. Look at 52.27. Now we did a look below 51.48 and fail. So the target is all the way back to 54.65. Okay? Now check this out. This is the same as this. This is a rotation. You guys see that? It's the same thing. This is a balance area. This is a balance extension area. But the concept of rotation remains. The market looks below, fails, rotates up. Looks above, fails, rotates down. Do you folks see that? Now, I didn't make this up, right? This and this are the same business. This is on a 1 minute time frame. This is on a daily time frame. But the business doesn't change. Exactly. We are going through the washing machine. There was a gentleman, the great Art Cashin, director of floor operations for, I believe it was UBS, on the floor of the New York Stock Exchange. And he would call this the great washing machine. Now, if you learn how to trade rotation on a 1 minute chart, okay, pretend this is, you want to be a Formula One driver. This is go-karts. This is F1, right? So you start learning here and work your way up through the time frames as you start making money to here. The concept, the principle of rotation is exactly the same. Okay? Okay? That's the concept of rotation. Right? Now, oh, okay. So if you learn how to trade this, and this is what I teach, is how to trade these rotations. If you wish, you can build it up and trade longer time frames. Okay? So let's go and take a look and see what's going on tonight. Tonight we are gap higher. Okay? We are gap higher. Right? There was a gap between yesterday's high and the low of tonight. So overnight inventory is long. It is 100% long. Okay? So if overnight inventory is 100% long, because this happened in the overnight yesterday, what we're looking for is we're looking to see if inventory corrects lower. That is the normal course of business. Now, the problem with that is between yesterday's high and the overnight low, there is a gap. In that gap, there are people who are trapped short. Right? So when you go look at the low tonight, is it a poor low? Let's go take a look. What a coincidence. It's a poor low. What does a poor low mean? It means buyers are competing at 53.78. How do we define long and short inventory? Very simple. You look at the close of the previous day, and then you look at the trading. Is it above the close or below the close? Or back and forth over the close? So this is long, this is short, this is mixed. Does that make sense? Hey, only flow. Does that make sense? So if inventory is long, we're looking for a move down. If inventory is short, we're looking for a move up. If inventory is mixed, we're looking for back and forth chop. And that's how you manage your expectations. Now, if inventory is long and you don't get that move lower, what does that tell you? Inventory 100% long means that every single trade is above yesterday's close. Very, very simple, Luke. Right? Very simple. Right? Right now we're doing a look below and fail of 53.99. Right? Hey, Mark, how you doing? So VWAP is right here in this 5400 range. So if we did a look below and fail and you went long, say 5400, 5401, we're going to have some sellers up here at 3.5. Just real quick, while the trade's happening, if anybody did take that look below and fail of 53.99 half, okay? And that's how we base our trading decisions. Because when the market sells off under a level and then those sell orders are complete, it will rotate back up just like it rotated up here to go grab product at a higher price. Right? So the same principle applies here as it did here. It's just the time frame is shorter because all we're doing is we're looking at trading on shorter or longer time frames. Does that make sense? Yep. That's the concept of rotation. And trust me, if you don't understand the concept of rotation, you're going to lose a lot of money trading. Unfortunately, because markets only trend what? What's the stat? 20% of the time? Isn't that the stat? I'm not a stats guy. Where are my stats guys? Right? 20% of the time, markets trend. The rest of the time, they're in these rotations. What are we rotating? 23%? Cool. Right? What are we rotating? We're rotating inventory. Why? Because it's a market. This is practical information you can use so you're not shorting here and you're not shorting here. Right? I don't like the word imbalance. It makes you sound like you're mentally irregular. As Rocky would say, it's balance and trend. Okay? Right? I don't know where they got that imbalance word from. Right? But balance and trend, right? Rotation and trend. What are you rotating? Inventory. What is trend? Price exploration. Right? Trend is caused by change. So right now the markets, because nothing is set in stone, we are going to rotate back and forth in this 54.65 to 51.48. So folks, what does that mean? Don't get short when the market looks below and fails. Don't get long when the market looks above and fails. And that you can apply to here. Right? It's the same principle because the business doesn't change. Right? And you base your trades based on that principle. Very simple. Right? This helps you know where you are, and it helps you manage trades effectively. Right? It helps you manage your expectations. Because if you can't manage your expectations, you will trade emotionally because you have no clue what's going on. Right? And when you're emotional, you make very bad decisions. Very bad decisions. Right? And an emotional trader is a very unprofitable trader because they can't manage their risk. They do all these crazy things that you never hear about, like revenge trading, right? And FOMO trading. Those are words that you don't use in a professional work environment. So I'm not telling you that you have to wake up in the morning and put on a suit and pretend you're going to work, but at least have that mentality that you're going to work. So you're not doing this like someone who's playing bingo, right? Good stuff, Mark. Thank you. Nice trade. Beautifully done. So the balance zone I came up with this morning, well done, Mark, is, and this is how I found it, was right here. So I was using these lows and this high and that high and that high. And when you hit that high and you looked above it, you came to that low, turned around, went and looked above that high, right? And that gives me that two-sided trade that I'm looking for, right? And then you just double it to the upside, double it to the downside, and then here where we are now, we are in 4 times profit. So this is the cost basis. This is balance times 2. So this is doubling your profit, your cost basis, right? And then this is 4 times cost basis. All right. So now all we do is we sit and wait for the next trade. So if you did take the look below and fail of 53.99, look, you got sellers right here, right under 53.04, right? Use the candles to tell you where you are going to encounter resistance. If you start watching this stuff, then you'll know where you can expect sellers. So say you had bought 5,400 here and you saw the market come up here and it can't get to 3.5, put a sell order out here and see if it gets executed. So if you're long something at say $1 and you go to sell it at $1.90, $1.80, and no one's buying it, what does that mean? That means somebody's undercutting your price. Now, this gives you two important things. One is it tells you that you've got competition, right? It tells you that you have competition. It's practical. You don't have to memorize a bunch of chart patterns. If you know where the seller is, you sell before them. You got to use a little common sense. There's nothing wrong with understanding chart patterns, but maybe try and understand the business that creates the chart pattern, right? I would rather understand the business than go and memorize blindly a bunch of patterns. Because then you don't know when those patterns fail. That's why traders can't get out of trades quick enough. There's got to be a business reason to take the trade. What's the business reason here? The business reason is the market looks below 53.99.5 and the orders underneath 99.5 are completed. They see buyers, so they raise price. So you buy some at 5,400 and sell some at 5,402. Right? Now, that's not a huge trade, but it just shows you that if you know there's competing sellers at 3, just under 3, you want to get rid of your product before they come in and steal your customer. Does that make sense? Does that make common sense? Anyone? Now, wouldn't you rather trade with common sense than trying to memorize a pattern? Front run the sellers. Exactly. Right? Now, if you are a more aggressive trader and you're holding, the next area is going to be 5404, where the next sellers are going to be. So say you bought 5 contracts here and you sold 1 or 2 or 3 here. Maybe you sold 2 here. You sell the other one here at 3.5, 3 3/4, right? And if you want to hold your runner, you can hold it for there. This way you have intelligent tactical information on where to sell your inventory. Because when you are long inventory. When you are short inventory. See, look, to the tick. Now, isn't it better to know in a simple way where the seller is going to be? To the tick, to the penny, than memorizing some pattern, using some indicator, right? Look how simple it is. I drew that line here, and it's still working here. And it's not rocket science. There's no math to it. All it means is if I was a seller at 4, when the market comes back up, I'm going to sell at 4 again. Now, people ask, JJ, why don't they hold on and sell higher? Because there's other people selling too, and you got to compete. Does that make sense? You have to compete with the other sellers. Otherwise, you can't get rid of your product. Make sense? That's why price goes lower, because sellers are competing. If the trade doesn't make sense, don't take the trade. If you're in the trade and the business reason for the trade evaporates, get the hell out. If you start thinking like this, you will stop being emotional. If you stop being emotional, you'll stop making bad decisions in business. So you're still long, right? There's still a seller at 4, right? So I like to scalp in and out. So if I know where the sellers are, I'll sell a tick or 2 before they step in. But if you're one of those traders who has to hold a trade, well, how do you do that? Right? Say you're long at 5400, right? Well, I would say if the market breaks 5401, you're in trouble. Is there any way? Yeah, because when you get there, they'll sell. Do I trade power hour? What's power hour? That sounds like a CNBC thing. That's like markets in turmoil, markets in olive oil. What's power hour? Just tell me and I'll tell you whether I trade it or not. Luke? I'm just making a joke, but I honestly I don't know what power hour is. Is that the close? The last hour? Hell no. Listen, if you haven't made money all day, you're not going to make money in the last hour. And I don't trade the last half hour for sure. Right? What's LCT? I have no idea what that is. Niv, Nivaz? Sorry. Okay. No. No, I only do business when my business setup presents itself. The last hour of trading, the last half hour of trading, that's when size traders are cleaning up their blotters for the day. I know because that's what I used to do, right? You it's like closing off your bar tab with your market maker, right? So there's a lot of stuff. Think about it like trucks, you know, going back to the loading dock. Yeah, I don't know what that is, Nivaz. I wasn't a market maker. I was someone who fed order flow to market makers. So what I would do in the last half hour is I'd call my market makers and they'd go, okay, I'm short 200,000 shares of this stock. I'd sell them 200,000 shares, right? If they're short at $1, I'll sell them 200,000 shares at 97 cents, so they make 3 cents on 200,000 shares for representing that order for me. That's what I used to do. That's called cleaning up your trade blotter. Okay? Market makers are dealing with their clients at that time. And think about it like a sandwich shop. When the store starts to close, what do? Wipe down the counters, right? Sweep the floors, right? That's not for you as a retail trader to go jumping into. The first setup I've seen VS this morning is the look below and fail of 53.99. Well, you guys, it's really not about advantage. It's a business, right? My job, if my client had 5 million shares of stock, my job is to sell at least 20 to 30% of the traded volume in that stock every day for my client. See, I traded for insiders. I traded for the smart money. My favorite time to trade is when my setup presents itself, Dylan. I like trading Globex because it's nice and quiet and slow. And you can see the agenda very clearly. Right? It's like when I look at a try and ask in some sort of way that I can answer intelligently. Another look below and fail of 99.5. You know there's going to be sellers at 53.02 and 3/4. Travis, you're in my coaching class. We know this conversation, right? When more buyers show up, sellers raise price. Dude, I don't know what that means, and I'm gonna start blocking you, okay? I'm sorry. I don't know what the hell you're talking about. If the audio is lagging, maybe try refreshing your YouTube. Okay. London's opening, moving higher. We cleaned out the sellers at 6, but do they step back in? Yeah, apologies for that. I uh, I have a pretty quick upload speed on my internet, but obviously there's a bit of a lag this morning. If there is, I apologize for that. Sellers stepped in at 6, rotation back down to 54.02. Oh, my pleasure, Futures Freeman. In the Discord channel, there are all the videos that teach the concept. So if you come into the trading syndicate, not only do we teach you, the videos are there. Uh, you can talk to me directly, right? And we would love to have you with us. Hey, Sandy. ¿Qué pasa, hermano? Yeah, Travis. What you need to do, Travis, you and I need to do a one-on-one. It's been a while, right? You got to stay focused, brother. You're doing so well. Now, don't start looking all over YouTube and, just stay focused. You're doing well. You're pulling money out of those funded accounts. Just keep it up. Don't get distracted by all the noise, okay? You've done really well since you joined the coaching program, right? You're killing it. Just now, don't get all hung up on what other people are saying. You know what goes on in a market, right? You got 1,000 pieces of something, a whole bunch of buyers show up, you raise the price. If you got no buyers, you put it on sale, right? Keep it simple, right? Don't go off the rails, right? The problem is, and it happens to everybody, is especially when there are no trades to be had or you're missing trades, you go off the rails and you start hunting and searching, right? And when you start hunting and searching, you get into trouble because you go hunting and you basically find nothing but trouble. Stick to your setup. Be disciplined on how you do business, right? If you worked in an office building, if you worked in any kind of business, you would not do what you do as a retail trader. They would fire your ass in a New York second, right? Travis, you're a welder. You're never going to do FOMO welding or revenge welding, right? It's just not going to happen. Now let's see if we accept under 53.99, we might have no, I was going to say we might have a short. And look at that. As soon as we came down, oh, okay, now we got an aggressive seller. All right, we got an aggressive seller, right? So if you are shorting this, I would use probably the top of that candle as a stop, and you're looking for buyers or bids that are competitive down here at 96 and 3/4 half. Okay? I don't even have my trading software open. I'm a little behind this morning. So if you're short 99, 98, 96 and 3/4. I told you, right? 96 and 3/4. If you can't get filled at 96 and 3/4, maybe grab one off the offer. Okay, there's a half. There's 3/4. There's 95 and 3/4. Let's see if half works. Some bids come in. The offer lifts. A couple of points. And if you're still short, if we take out the 95 bids, we'll come back down to like that 93.5 level. So that'll be where you put your next bid is 93.5, 93/4. Okay? So that is you spot an aggressive seller at 99, you sell alongside that seller, you put your stop above the top of that candle here. Right? Right there, there's your stop, there's your sell, and then you start doing some covering down here and clip in and out a couple of points. What is the business reason for the trade? The business reason for the trade is sellers are competing under 99.5. You sell alongside those sellers, right? You're going to see some bids here. That's why you do a little covering here. If this level breaks, I would go down here and put some bids here at 93.5, just under 94. If we do a look below and fail of 95.5, there's going to be a seller at 97. Right there. Pretty cool. You can tell where the sellers are by looking at a 1-minute candle. So if you're short and those sellers are still there, you can stay short. This is practical information you can actually use to make money, right? Not some indicator, not some pattern, right? This is practical. Because if that seller at 97 and 3/4 goes away, you are cooked in the short because you don't have any backup, because you can't push price down. So then the seller engages here. They move lower. Why? Because they're competing. So now you look at this area right here, just above 93, and see if the market can come down and hit you. Do you guys understand this? This is how you short. You wait for a seller to appear. If the sellers do not appear and start pushing price lower, there is no reason for you, there's no business reason for you to be short. There you go. Look. Right there. See? Told you to put your cover there. Right? I'm calling out these trades before they happen where you can actually make money. Right? Hey, Sniper Kid, how you doing? Right? This is practical information. Right? Where you can actually use it to go make some money. Make your money and then stop trading. Okay? While you're learning how to trade, don't overdo it. Once you make, if you were short 98, 99, 99 is a bit high. I'd say practically if you're short 98 and you cover some at 95 and you cover the rest at under 94, that's not a bad trade. That pays your phone bill. Right? You do that. Look at that. See? Look. There's the cover. Now, if you didn't cover under 95, there's no pleasing you. Do you understand why you cover into weakness? You put your buy orders in as soon as you're executed. Right? This is why you trade for 3 points here, 3 points there. It adds up. Right? Because if you were looking for 91, you weren't going to get it. You guys see that? I mean, everybody saw the rip from 94.5 up to 5,400. So if you were short and you didn't take profits, now if you're one of those traders who, oh, I have my stop at break even, what's the point of doing a trade if your stop is at break even? All you're doing is spending commissions. There's no point doing business at break even. Why are you in business? Think about it. You're only making money for your brokerage firm. All of this off a 1 minute candle chart. So you can spend a lot of money on indicators and charting software and all sorts of nonsense, or you can actually learn how the business works and trade alongside the business, manage your risk, manage your expectations, develop good business habits, right? And make a living. It's up to you. What do you prefer? So we found the bid at 93, 94. So overnight inventory long, we had a correction from 54.06 down to 53.93 and right back up. So it tells me that the shorts are trapped underneath 53.93. Right? That is tactical knowledge you can use. So you're not shorting when it gets down to 93. That's where you're covering. Does that make sense for you guys? Folks in the room, short covering is competitive buying. So Dylan, you're short 500 contracts, I'm short 300 contracts, Sandy's short 200 contracts, right? Raj is short 500 contracts. What if we all go and buy at the same time? Then you get that big green candle. Exactly, Travis. Exactly. All right? Overnight inventory, the correction is normal. We're not getting normal corrections. As soon as it got down to 93, there was a violent bid that came in, right? Buyers are competing at 93, 94, 95. Push the market up to 54.03 in what, 4 minutes? So when the market does something that's a bit odd, it's trying to tell you that business is a little bit different. And you should manage your business, right? As the penguin would say, you govern yourselves accordingly. Yeah, competitive buying is caused by short covering. Competitive buying is caused by aggressive short covering. You can't find a good futures broker in Canada? Welcome to the club, my friend. Do you know why? Because nobody in Canada is licensed to trade futures. And if they are, they charge you what, $15,000 a contract? Go to AMP Futures, go to Iron Beam Futures, use one of the Chicago firms. I don't get compensated by them or anything, but they're good firms. I don't even think. Do you know none of the banks are licensed to trade futures in Canada? Not unless you have like wealth management and you have, like $1 million or something. No, it's allowed in Canada, but it's just, it's not popular at all. In Canada, they want you to just put your money into an RRSP, into a retirement account, and leave it alone. They really don't want you trading in Canada because for 30, 40 years prior, Canada had a massively bad reputation for like bad penny stock deals. Hello, let me raise my hand, and that sort of thing. Okay? So they want you to put your money in an account and just leave it alone and let professional money managers manage it. They don't want you trading, especially not futures. Okay, so we're right back to where we started. Right, had a little inventory correction, took out the lower stops. Now we're just going to go back and forth and chop around. Yes, the police are coming to get me, Jerry, because I'm telling retail traders what actually really goes on in the market. The institutions are coming to lock me up and throw me in a hole because I teach you guys how not to get eaten. Yeah, the black SUVs. Listen, yeah, the thing is in Canada too, sorry to go off on a tangent, but there are provinces like British Columbia where US brokers will not touch you, right? Now, there's always some drama in Liverpool. Yeah. Yeah. If you're in British Columbia, most brokerage firms won't touch you in the United States because they have an agreement with the BC Securities Commission not to take your account. All right, where's the next set of sellers? Let's say up here. Try Iron Beam, Dylan. It's a real pain for people in BC. Yeah, there we go. Sellers at 6. Good stuff. So we're just doing a rotation here. Let's see where we find a low. Maybe 99.5. There was one good short. I could not have called out that long. I didn't see that happening, right? But I knew that we should have been covering under 95. And when you have that kind of tactical knowledge, you can actually, and it doesn't come right away, and it's not easy, and it doesn't happen automatically, right? You have to spend time watching the charts and observing this thing and developing good business habits while you observe, right? You can't trade from the cell phone at work and expect to be profitable, right? You can't trade when you're coming out of the subway, right? That just, you know, it doesn't work. Now, we're coming back under 99.5. Let's see where we catch a bid. I'm thinking 97.5. That's pretty much it for today, folks. Anybody else have questions? Back under 99, we'll be looking for that. If we take out 97 and a half, look for 95 and a half. Right? And if we accept under 95 and a half, you're looking for 91. And through the day, here's a big level for you, okay? Is that overnight low, okay? This 53.78, keep your eye on that because that is the gateway to the gap, right? So if we break 78, we'll start going down. Now, the gap fill is all the way down at 53.39 half. So that's a big, big gap. So just watch yourself, right? If we get down there and you're shorting in that gap, be careful. Because if you short in a gap and a big bid comes in, then you can get one of these big green candles. Okay? We don't know what's lurking in here for bids until we actually get down there and explore in here. That's pretty much it for me today. Thanks, everybody. Come join us at Microefutures. Look at that, 97 and a half, 97 it held, right? Learn how to watch the candles. The candles will tell you so much information. All you got to do is pay attention, right? Pay attention, be focused, and don't get distracted, right? Come visit us at the Trading Syndicate, and we'd love to help you learn. And I am running coaching programs and one-on-ones. So if you're interested in that, reach out to me. You can DM me on X. I'm vwaptrader1. And I'll do everything I can to make you profitable. Thanks, everyone. Please trade intelligently out there, and we'll see you at 9 a.m. Eastern Time for our next session. Bye for now.